Good afternoon, everybody, to the Access to Incentives and Funding for the Forestry, Pulp and Paper Sector webinar. It is presented by the Paper Manufacturers Association of South Africa, otherwise known as PAMSA, and the DTIC, the Department of Trade, Industry and Competition. The purpose of this webinar is an introduction and overview of the Department of Trade and Industry and Competition's incentive schemes, especially for agro-processing and the Black Industrialists Scheme. And so our speakers today will delve into this and help us understand it and obviously answer any questions you may have. But without further ado, I'm going to hand over to Tafadzwa and she will do the necessary. Thank you, Tafadzwa.
Okay. Thank you very much, Sam. Good afternoon to us all. Good afternoon to those that have already logged in. And thank you very much for giving us this time today. So the webinar that we are just about to get into is just to give you more information about access to funding that the government has. So today we will only focus on what the small enterprise financing agency has to offer, as well as what the DTIC has to offer under one of its schemes, which is called the Agro-Processing Support Scheme. This is being done in line or in support of the Forestry Master Plan, which we developed beginning late 2019. And then by October 2020, we had the Forestry Master Plan being approved by government. So the industry has set itself to increase investments, jobs, and improve competitiveness underpinned by a greater inclusion. So this means that we have 4 key performance areas in the Forestry Master Plan that we have been tracking, and this includes investment, job creation, transformation, as well as improving competitiveness. And in our delve to do this, we are, as government, industry, as well as labor, we have all committed to see this Forestry Master Plan as a success. And one of the pillars out of the 6 pillars, or out of the 6 key performance areas that the Forestry Master Plan is underpinning, is processing. Processing is being led by the DTIC, and processing of the log or processing of the tree. So any industry that has to deal with processing fiber, we are looking after that, and we are saying if you need to increase or increase your capacity, if you need to renew your machinery, we do have incentives that will assist you to do that. It won't be 100% funding, but you will get some percentage funding that will assist you in the work that you are doing. So without taking much out of the presenters, I will leave the time to Esther. She is the director responsible for the Agro-Processing Support Scheme. She will take us through, and then Mr. Don Mashele will also come in and give us the incentives or the funding that they do have at CIFA. Thank you very much.
Good day, everyone. My name is Esther. Like I already been introduced, I'm in Agro-Processing Scheme that I'm responsible for. Today I'll be presenting the scheme, the eligibility, what are we covering in that scheme, what are qualifying assets and what are non-qualifying. Can go to the next one. Then that's just the background, what we'll have on the contents, the objective of the scheme, the description of the program, what are the targeted sectors, and what are the mandatory conditions that is applicable to this scheme, how the grant is being offered, what will be the qualifying asset, and what will be the non-qualifying cost for the scheme, and at the end, how do we contact us? Okay, in the background, the scheme is really being developed for the revitalization, the potential of the South African agro-processing sector. as we know that this sector of agriculture plays an important role in promoting economic participation. It creates backward linkages with primary sector and forward linkages with downstream industries, encourages a value chain approach to value addition and agro-processing, injection of new entrepreneurial dynamism. So we are also looking at the new participation in that. And with these, we are supporting all the policies that the government has looking at the National Development Program, the IPAP, the BEE, and others. Thank you. Next. Okay. The objective of the Agro-Processing Support Scheme is to stimulate investment by South African agro-processing beneficiations, that's agribusiness enterprises. The following should demonstrate that it will achieve some of the following. Have the increased capacity when you come to us with that business plan that must come out. Employment creation, modernized machinery and equipment, competitiveness and productivity improvement, and broadening participation. Next. Here's the description of the program. The program can involve a wide range of processing that's primary, secondary, and tertiary or beneficiations activities of post-harvest that result in value addition and or enhanced storage life, such as cleaning, sorting, grading, waxing, controlled ripening, labeling, packing, and packaging, warehousing, canning, freezing, freeze-drying, wood caving, extraction, synthesizing, polymerization, and various levels of processing that change the agricultural product form. In the forestry value chain may also include sowing, pulping, peeling, and preservations. Thank you. Next. We've got 6 targeted sectors that we are focusing on in this scheme. The first one is food and beverages value addition and processing for winemaking only. And this is only for Black, that we are saying 70% Black owned and managed entities will be supported for manufacturing wine only. And for carbonated soft drinks, only entities with a less than 5 million turnover can apply on that. And we also have furniture manufacturing, fiber processing, feed production, fertilizer production, and essential oil production. Next, Samantha. These are mandatory conditions for an applicant when coming to this scheme. The project must be a registered legal entity in South Africa in terms of the Companies Act 1973 as amended, or the Companies Act 2008 as amended, the Close Corporation Act 1984 as amended, or the Cooperatives Act 2005 as amended. Be a taxpayer in good standing. Be involved in starting a new agro-processing beneficiations operation or expanding or upgrading an existing agro-processing beneficiation operation. Be a triple BEE compliant in terms of the triple BEE codes, achieve level 1 to 4. That's what we look. If you are level 5, you will not qualify for this scheme. And submit a valid triple BEE certificate of compliance or affidavit when submitting an application for applying in this scheme. The mandatory conditions continued. You need to undertake an investment project which should result in retaining or creating direct employment. Indicate that the project will be able to boost the local capacity of identified product or where possible prospects of export orientation. Adhere to sectoral minimum wage and legislative requirement governing the sector and all bylaws, not only for the agriculture, but for minimum wage, one needs to comply to that. Demonstrate that at least 50% of the inputs, that is your raw materials, will be sourced from South African supplier, and that at least 30% of the inputs will be sourced from Black South African supplier, in particular and or government departments, state-owned entities, or similar government institutions. I'm sure you will all understand that, especially for the forestry, some of the forestries are being owned by government or SOEs. So they will qualify if one is sourcing from this SOEs or government department, they will be qualifying for the 30% because we'll regard those as black. And where inputs cannot be sourced locally, if you are 100% black owned and managed applicant may source within the African continent. Based on merit, furniture applications will be considered irrespective of them not meeting section 4.1.8 of the guideline. 4.1.8 of the guideline is that of Black South African, is that 30%. So that's 4.1.8 of the guideline. So we are saying for furniture, we understand that this forestry is not owned mostly by blacks, so they will be considered for that. Commencement date of the project or activities applied for must take place within 90 calendar days after the application has been approved. Here we are saying once we get approved, you need to start your production or your establishment. But once you submit an application to us, you don't need to wait for an approval. You can continue procuring and start building so that once you get an approval, you can start with all that and you can submit a claim within that indicated period. Thank you. Next. Then the grant offering, the scheme offers a reimbursable grant of between 20% up to a 30% cost sharing grant for a maximum of 20 million rand. 20% is for all those projects that are above 10 million investment, and 30% are all those projects that are below 10 million investment. The grant is over a 2-year period with the last claim submitted within 6 months after the final milestone that were approved for that project. Thank you. Next. That is the economic benefit criteria, where we are saying we may consider additional 10 million for a project that meet all that, increase base employment by at least 25%, transformation achieve a level 1 on BBBE course of good practice, geographical spread project located in state-owned industrial parks or areas with an employment higher than 25%, local procurement, procuring at least 70% of inputs or equipment and machinery that is locally manufactured. So for those projects, if they meet all these, not one, they must meet all these criteria, then they will have additional 10 million. But the 20 million is still kept at 20 million. So if the client would, with the investment they submitted, they qualified for 10 million, then we can add this criteria if they qualify, if they met all these criteria. The other thing, this basically it's applicable to expansions, because you see with an employment, it's only expansion when you expand where you can increase your base year employment. Thank you. Next one. So these are qualifying assets and the investment cost that will be covered under Agro-Processing Support Scheme. We are covering new machinery and equipment, owned or capitalized financial lease. We don't cover operational lease. So you cannot lease the machinery and you say you come and apply on agro-processing. It must be a financial lease. So new machinery and equipment, tools and forklifts at cost, and will also include green technology, energy and resource efficient equipment. Commercial vehicles, we cover that. Vehicles should used for collection, delivery and distribution must be registered in the name of the applicant, but this cannot exceed 25% of qualified investment in machinery and equipment, and it will also be kept at 2 million. Because our scheme is more on machinery and equipment. That's what we are promoting. You cannot come with a vehicle that is more than what you are going to invest on machinery and equipment. That will all be kept to 2 million. If it's more than 2 million, we can only give you 2 million on commercial vehicles. The building, it also, we are saying it will not exceed the investment in machinery and equipment, and it can also be kept to 2 million. Competitiveness improvement costs up to 10% of the qualified investment in machinery and equipment, and also be kept at 2 million. This, when you talk of competitiveness, these refer to conformity assessment, information technology, logistics, your certification, and all that. Thank you. The next slide. These are non-qualifying costs. We don't cover costs. We don't cover land with our scheme. We don't cover staff wages and salaries, as well as staff-related costs incurred in implementing any of the above project. We don't cover passenger vehicles such as sedans, 4x4s, SUVs, and people carrying minibuses, even if they are registered in the name of the entity. VAT and finance charges on asset is not covered. Rates and taxes are not covered. Cost incurred before submitting an application will not be covered. I'm sorry, that was a mistake. Remember, previously I said once you submit an application, you can start procuring, but you cannot start procuring before you submit it. So their cost incurred before submitting an application will not be covered. Increase in investment cost as a result of exchange rate fluctuation and submitted after acknowledgement of the application or claim will not be covered. We don't cover beer and spirits, only wine is covered under Agro-Processing Scheme. Thank you. The next slide. Then that is the eligibility criteria of what is needed when you want to come and apply for agro-processing. An applicant must submit a completed application form and a business plan with detailed agro-processing beneficiations activities, budget and projected in statement and balance sheet for a period of at least 3 years of those projections. For existing entities, we are saying submit latest financial statement reviewed by an independent external auditor or accredited person not older than 18 months. The approved entity may not reduce the base year employment. Once you were approved with, for an example, 20 employees that you said you'll retain, you cannot come when you submit a claim. You said now there are 15. That claim will not be approved or processed for payment. And that's the statement that's coming. That's any reduction in the total number of employees over the duration of the incentive will disqualify the applicant. Any claims not yet evaluated or paid will immediately lapse, and no obligations will accrue to the DTIC on such claim. And disbursement will be made as per the approved milestone and will be based on actual cost incurred and performance criteria being met. Once you were approved for a certain product, you cannot just change and come and submit a claim. Those are one of the milestones that you need to achieve. And you cannot now, when you submit a claim, you've changed your level or the level of BBBE has dropped. Now you are just level 5, just a compliant. That claim will not be processed. Approval of all assets applied for will be provisional pending the DTIC inspection or consulting engineer assessment and recommendation at the claim assessment phase. All claims payments are subject to the availability of funds. For all claims submitted to us, we are conducting a physical inspection that is done by another unit for independency and segregation of duties. So we rely on that inspection before we can disperse and do payment to the approved project. Thank you. Next slide. So that is our contact details. If one wants more information on the guidelines, you can go to the incentives and go to financial assistance, then it will give you all detailed about the agro-processing scheme.
Thank you so much for this wonderful opportunity. As said, my name is Don Mashele from SIFA, a small enterprise finance agency. Just to put context in terms of who we are an implementing agency of the Department of Small Business Development. So under DSBD, you've got two agencies, ourselves, the SIFA. Our mandate is to provide funding to SMMEs and cooperatives, and our sister agency, SEDA, provide non-financial support, which is business development support. So this is more like a busy slide, but in a way, it's actually indicating SIFA's operating model. We provide funding directly to SMMEs, and that's the focus that we'll focus on this morning and this afternoon. And we also have a channel called the wholesale lending, where we work with intermediaries that are in a business of providing funding to SMMEs. We also work with some lenders, banks in the main, where we provide credit guarantees, and we do some fund management, provide fund management services as well. And we've got a small portfolio of properties. But for today's session, I'm going to focus more on what we do under our direct lending channel. So under direct lending, that's where we provide funding to SMMEs and cooperatives directly. And we only as SIFA provide debt funding. We don't have equity. We don't have grants. We've got programs where we combine a grant and a loan into one package. We call those blended financing instruments, and I will unpack those as we go along. So in terms of these, the direct lending products, we've got what we call asset finance. And asset finance, that's where we provide funding to those businesses. It's either you want to start a business, you want to expand a business, or you want to purchase a business. We can provide funding under the asset finance instrument. And here we're talking about those assets that are identifiable by a way of a unique number. It could be a serial number or a registration number. So you want to purchase vehicles or equipment or machinery, we can fund that through our asset finance. Under our term loan, that's where we fund any other form of movable assets which are not uniquely identifiable. You know, here we're talking about it could be fixtures and fittings, it could be furniture, any kind of an asset which you cannot register what you call an installment sale, because two assets will look the same in a way. You know, there's no unique registration of those particular assets. So we fund those through this instrument that is called the term loan instrument. We can also, under this instrument, term loan, finance working capital. Here we're talking about operating expenses. We can fund that under the term loan instrument. The other instrument that we have is what we call contract financing. And here we're talking about those businesses that will have acquired contracts, you know, from an off-taker. It could be a public or a private sector organization or company. You've got a valid contract, a purchase order. You are coming to us, you're looking for funding to service that particular contract. Then we can provide funding up to a maximum of 15 million rands. The other instrument is what we call the revolving credit instrument. And this instrument is where we provide funding mainly to our existing clients. Some of the clients that we support, you find that someone has got a contract. If I give an example, it could be a 3-year contract. The value of that contract is probably 20 million rand. And within the 3-year period, you will be getting multiple purchase orders. So what we do there, the first purchase order will do a thorough due diligence. But now going forward, as and when you get subsequent purchase orders, you know, you can have more like an overdraft kind of a facility, a revolving kind of a facility, because you don't want each time you've got a purchase order to come and make a fresh application. So we use a revolving instrument for that. The eligibility criteria, who's eligible to apply for SIFA funding, in terms of natural persons here, you must be a South African citizen with a valid ID document. or a naturalized South African. In terms of juristic persons, legally constituted sole traders with fixed address, a partnership, a cooperative. We do finance non-profit organizations that have got a social enterprise element. And we also do those corporations, PTY and PTYs, private companies we can fund under the juristic persons. The business that we support must be within the borders of the Republic. So we don't finance businesses that are operating outside South Africa. And then the other thing that we do require as a form of eligibility is that the controlling interest in the business, which is 50% plus one, must be held by a South African citizen. In terms of employment, 95% of the staff working for you in a business have to be South African citizens with valid ID documentation. And this we monitor throughout the duration of the loan. And the other thing that we also require is that one member, if it's a CC, or one shareholder, if it's a PTY, must be operationally involved, at least be there full-time in managing the affairs of the business. Because we are a development funding institution, we've got what we call developmental impact indicators. We check such things that whenever we support your business, it needs to give us the developmental impact. Here we're talking about things like job creation. It could be a business that is in a township or rural area, young owned and managed businesses, female-owned and managed businesses, businesses owned by entrepreneurs with disabilities, those kind of things. The other thing, because we provide funding, which is a loan, and we are governed by the National Credit Regulator through the National Credit Act, we make sure that the businesses that we fund, we have to do proper affordability testing, and for that, we only support businesses that are commercially viable. In terms of risk by the entrepreneur, we won't say we need a particular contribution from you if you are applying for funding. However, we will look at other things really that should demonstrate some form of commitment into the business. Some of the applicants will have that equity and contribution investment. Some could be sweat equity, signing personal suretyships. So what we're talking about here is that when things don't work, there must be something that is showing some commitment in the business. You don't just lose face and walk out of the business. So we measure such things as well. The exclusions that we have, businesses that we do not fund. Yeah, we're talking speculative real estate. If you're buying property with the hopes that you're going to resell that at a higher price in the near future, that's speculative in the very nature. Won't be able to do that. However, we can do property funding if you operating a business where you want to be owner of that particular property as well. You don't want to be a tenant and paying rent to a landlord, but you must be at least operating your business within those premises. We can fund in that case. The other thing that we would exclude, transactions, people under debt review, you've been insolvent and you're never rehabilitated, you're under business rescue or under liquidation. We don't support those kind of businesses. You are in the production, manufacturing, or retailing of arms and ammunition. We also exclude those. Morally repressive sectors, as defined by the dtic, which we also actually exclude those as well. The labor broking activities we don't support. The issue of compliance, you need to be compliant in terms of tax and good standing with SARS and any other regulatory requirements. We check such and make sure that the businesses that we support, they are compliant industry-wide and also in terms of corporate governance. We also check, we are a wholly owned subsidiary of the Industrial Development Corporation. The IDC has got what they call a delinquent register. We check such if you had applied and had funding from the IDC, you didn't conduct your affairs well, such that that led to you being listed in the delinquent register. Then we check such things. Also, in terms of the National Treasury, if you are listed in the restricted supply of database, we check those things and won't be able to support. loss-making businesses. If you're acquiring a business that is making losses, without a very tangible, realistic turnaround strategy, we won't be able to support. So those are the exclusions that we do have. The next part of the presentation, I'm going to cover now the programs that we have, the blended finance programs that we do have. And by blended finance programs here, we are talking about those programs that were designed to service a particular market, and we are combining a grant and a loan into one instrument. So the first one that I want to talk about is what we call TREP, Township and Rural Entrepreneurship Program. So here we are supporting businesses that are operating in township and rural areas. It could be any kind of a business. I mean, those bullets that you see there is just by way of examples: textile and clothing, bakeries, chisanyama, retail, automotive, personal care, and artisans. But we cover any form of a legal business that is operating in a township or a rural area. So here we're providing a maximum of R1 million. So the maximum that a business can apply for here is R1 million. 50% of that can be a grant to a maximum of 100,000. So we're giving the examples to say, if someone is applying for 100,000 as an example, 50% of that is 50,000. So that 50,000 will be a grant, and then the loan part will be the other 50,000. And the interest rate that we charge on the loan part is only 5%. So that is one extreme example at the lower end. So if you look at the other extreme, someone is applying for R1 million, 100,000 will be a cap, and this will be a grant, and then 900,000 will be a loan where we charge only 5% by way of interest. And the repayment period, we're looking at about 36 months. So eligibility in terms of TREP is very similar to the ones that are presented on the instrument. Registered with CIPC, 100% Black owned. Here we're saying 70% of staff members have to be South African. And then the enterprise obviously must be operating in a township or a rural area. And then the business has to comply in terms of whatever municipal bylaws that are applicable in that particular locality, be in good standing with SARS and registered with UIF. The other scheme that we have, which is targeted at entrepreneurs with disabilities. So here we're talking about a scheme where we provide funding from a minimum of 50,000 rands to a maximum of 15 million rands. Here it's not a blended finance instrument where we combine a loan and a grant. However, here we're providing funding at prime plus 5%. So when you look at where prime is sitting today, 10 point something, and then minus 5% is actually cheap funding rate that you get through the scheme, up to a maximum of 15 million rands. And then the repayment is 60 months. And we also provide here pre-investment support, which is 5% of the loan amount up to a maximum of 75,000 rands to assist. If someone has got a potentially viable business and they need assistance with a business plan, feasibility study, but we believe the idea is sound, we're able to commission a assistance here to assist to develop that particular business plan or feasibility study. We also provide post-loan support here. If they need a mentor, once we've funded them, we're able to provide that mentorship. The other one, which I believe would be much more relevant for today, is the Small Enterprise Manufacturing Support Program. So this program is a partnership we've got with dtic, where we provide a blended funding instrument to support businesses to purchase machinery and equipment, working capital, product accreditation, certification, and testing. The funding here, we're talking about a maximum of 15 million rands. And the repayment here, we're talking about a duration of up to 84 months. We can give interest and or capital moratorium or holiday, where we give you a breather for about 3 months when you're still maybe building cash flows, moving towards profitability. Here, the blended finance instrument is that 20% of what you're applying for will be a grant to a maximum of 2 million rands. And the loan part, we only charge prime interest rate. So it's another instrument here. We are providing blended funding instrument, a combination of a loan and a grant. Eligibility registered with CIPC, 100% Black owned. We're also saying here at least 2 years in operation. However, if you're coming with a business that is, it could be a greenfield, but very solid in terms of the business plan or the business case, we will consider such Black owned and managed businesses and be in good standing again with the receiver. This instrument is for young people. It's called the Youth Challenge Fund. So in here, we are assisting young people, youth, to access funding to start their businesses or to expand businesses. So we've got what you call here, you can see the red channel and the blue channel. The main difference though is that under the red channel, we are talking about those businesses that are in the tech space, tech and innovation. And the blue channel, we're talking about any other sector outside the tech and innovation. So here we're providing funding for startup businesses, a maximum of 2 million rands. If it's a tech business, 40% of that will be a grant and 60% of that will be a loan. If it's not tech, any other sector, 30% will be a grant and then 70% will be a loan. The loan part, we only charge 5% by way of interest. So that is for those businesses that are in the startup phase. Businesses in the expansion phase, the threshold is a bit higher than 2 million. We're talking there about 15 million rands. The grant part, whether it's the red channel, which is tech or in other sector, is the same as 20%. And the loan part is 80% at prime. So this is an instrument for young people between 18 and 35 years old. So that's the eligibility criteria, like I said before, 18 to 35, registered with CIPC and be in good standing with SARS, and be registered with UIF, 100% South African owned, be actively involved in the management of the business, and be willing to participate in our business development and mentorship program, because these being young people, we support in terms of pre-loan support and mentorship. We provide such through our sister organization, CEDA, and that's why we are saying willingness to participate in those programs. This one is more like guiding applicants. Remember, we normally don't ask for a comprehensive business plan. A business plan is fine, but what we are saying here is that if you want to apply for CFA funding, we guide you how do you package that kind of a funding proposal. You know, because if we are saying that we need a business plan, there's so many templates of business plans out there. Anyone can just go on Google, get a business plan completed. When we send it to us, only to find that it doesn't meet the criteria. We probably will use 40% of the content of that business plan. So this document guides you in terms of how to package a funding proposal. It's there on our website. If you Google, we work on our web. You go on our website under what we offer and the templates, you'll get details of this document. This actually guides you what are the things that we need: company information, the shareholder information, the structure of the company, the nature of the business operations. You need to outline that, the products and services. And number 6, we're asking about your market and the industry, because you need to understand the industry where you're operating in. Your target market, you must understand your target market, the behavior of your target market in particular, the marketing strategy, go to market your business and penetrate the market. You also must understand the competition. There's no business that is it's a monopoly out there. So you need to understand your competition and what is your edge. The location of your business, business location, it's strategic more often than not. And also understand your external environment. A business operates within a political, economic, social, technology, environmental, and legal environment. So understand those, and then tell us the relevance of that external environment in terms of your business. The funding requirements, what you're looking for in terms of funding, and then the financial model here, we're talking about your projections. Remember, we're providing funding, which is debt funding, repayable, over 60 months, which is 5 years. So over that period, you need to give us 5-year cash flow projections, realistic, well-motivated, so that you can demonstrate that you are able to repay the funding that you've got from CFA. the banking information of most businesses, if not all, you have some banking facilities or other business account, whatever it is, any facility that you've got with your bankers, give us that kind of information. Supply information, very important, because the value chain, the sustainability of your suppliers, and the consistency thereof is very important in your business. So we need to check for such. The staffing, people working for you, the compliance environment, last but not least, the SWOT analysis. So this document, we have developed this to just guide in terms of putting a funding proposal to CIFA. We are a national organization. We've got branches all over the country. Our main branch will be in the main city. In the main cities, for instance, when you look at Limpopo, we'll have our branch office regional office in Polokwane. Here in Gauteng, where I'm presenting from, we've got our office at the Riverside Incubation Hub in Joburg North, and the other one is in the city center in Parktown. But we do collocate with our sister organization, being CEDA, because CEDA has got a broader branch and distribution network than ourselves. In each district or municipality, there will be a CEDA branch. That is why you can see that in terms of outreach, it's easy to get hold of us. Contact details, we've got a website, and the reason we are sharing this is that when you want to apply for CIFA funding, we've got an online application portal. So you can visit our website, click under apply for funding. You can register your application. The portal is designed to be a screening portal. So it will ask you questions about your business. If you are eligible to apply for CIFA funding, it will then give you access where you can upload documents. Once you've uploaded all the documents, it will give you an application number, which will be your reference number. Say, for instance, when you start, you upload, we're looking for, argument's sake, 10 documents. At that point in time, you probably have about 8. It will give you up 20 working days to go and get the other documents, and you can still come back and finish the application process. But at that time, it will give you an inquiry number. If you have challenges with the application portal, you can also visit you can dial our call center, which is 012-748-9600, or probably drop us an email at helpline@cifa.org.za. Apologies, I think I moved so fast there. Let's go back. So that is that helpline@cifa.org.za. You probably have applied for CIFA funding and then you're not finding joy. You've got a dedicated email address where you can drop that email to complaints@cifa.org.za, and then we'll take care of that particular concern. Our various social media platforms on Twitter, Facebook, and LinkedIn. So I think in closing, the most important part really here will be the online application portal, because in terms of Q&A, someone might not be sure, am I eligible to apply for CIFA if this is my situation? We'll attempt to get to those questions, but in the case where by the time we finish the webinar, we haven't gotten to that, our website is designed to pre-screen your application, so you can still be able to get that. And like I said earlier, last one is that you've applied the CIFA, you are not getting joy, use that email, complaints@cifa.org.za. That's the end of my presentation. Thank you so much, Samantha.
I wanted to find out, when Esther was presenting, she mentioned something called a reimbursable grant. So what is a reimbursable grant? Does it mean you get the grant and then you have to repay the grant without interest? That makes it different from a type of a loan. So I just wanted to have clarity on that. Thank you.
Thank you so much. Esther, can you answer that question around what is a reimbursable grant?
Thank you, Samantha. Yes, thank you for the question. Reimbursable means the grant you don't pay back. It's not a loan, it's a grant. Reimbursable means you need to get money and start, then we reimburse you after you've started your establishment, meaning we don't give a grant upfront. So you cannot come to us and say, I don't have money, I need 10 million, can you give 10 million if my business plan is a business plan that is very good? That's not how we operate. Yes. So you still need to go to the institutions, the financial institutions, the DFIs, and get money and start your project. Then you submit an application to us for the grant. But our grant is not a loan. You don't pay it back.
Okay, so that's very clear. Okay, super. So you have to actually prove that you've bought the truck or the equipment,
yes,
before you can get the grant. Super.
Yes.
If anybody else has a question, if you're welcome to raise your hand and I can unmute you and allow your mic. But if we don't have any questions, I will probably hand over to Olga Bezuidenhout, who will deliver our closing remarks, and then we can give you a few extra minutes in your day. Over to you, Olga.
Oh, there we go. Hi, colleagues. I just wanted to say, I see we're going to finish a bit earlier today. I'm sure we can all use some extra time on a Monday, especially. I just wanted to start off by thanking Tafatswa from the DTIC to say thank you for including PAMSA in this awareness creation initiatives of yours. I think it's very important today, especially in the business environment, to be able to be aware of every possible opportunity out there where members and stakeholders can see where they can utilize additional resources, whether you're establishing a new business or you're an existing company that's looking to expand. I think we can all agree the business environment within South Africa comes with its own challenges. And for us to continue to survive in this climate, we need to be very resilient, which is why these awareness creation sessions are so important. So even though if some of your companies might not be able to access some of the funding, it's always good to share the information, because someone down the line who might feed into your company might be able to utilize it. And there might be new opportunities that can be created through these different communication channels. Colleagues, I know it was a lot of information in a very short span of time, but I have sent you the documents. You are welcome to review them, and you're welcome to contact our guest speakers directly if you have any further questions. I'd also just like, besides the FUDs, I'd also just like to thank Don and Esther for taking the time today and being our guest presenters and making yourself available for if there are questions and stakeholders do want to engage with you. Thank you so much. I know your schedules are very, very busy. And then finally, just to Samantha, who has graciously agreed to host this webinar for us and always managed to keep us on time. And like today, finish it a bit earlier, which doesn't happen often. Colleagues, thank you so much for each one of you for taking the time and attending this session. Like I mentioned earlier, I think it is of utmost importance so that every opportunity that currently exists is made available to create awareness for all stakeholders, so that you know if you need additional resources, because a lot of times we have challenges, we might have solutions, but we don't always have the resources in order to implement those solutions. So it's good to know there are options available out there. And the more we share this information, it allows us to create bigger opportunities and better opportunities or further that can be explored. So thank you, colleagues. I don't want to take you too long on this Monday, so I'm going to hand you back to Samantha. I hope you enjoy the rest of your Monday and good luck for the rest of the week.
Thank you very much. Have a good rest of your Monday, and we appreciate your time. Thank you too much to our speakers, to Fatswa and to Olga. Thank you and goodbye.